We could only hope that more gains means more volumes.
We didn't see the volumes today. 2.8 billion makes it the worst day that we've seen in terms of trading since the 23rd of April. So in around about 3 months. July does tend to be a bit of a quiet month, and that's not only because of school holidays, but also because it's before earnings season, and a lot of institutional investors probably not too keen to buy stocks just before earnings season, given that we could be in with some surprises either on the upside or the downside, but probably more to protect from downside surprises. And then, of course, we do see a lot of people on summer break in the US as well, in the Northern Hemisphere. So unfortunately, the end of the school holidays hasn't marked the return to more normalised volumes. Our market up by 0.5%, which is off the highs of the session, and that's mainly due to the influence of the Chinese market. The Shanghai Composite down by about 1.3%. Light on volumes, but very heavy on news today. We saw Whitehaven Coal receiving a formal bid from that Tinkler-led group. So we did see some of the coal stocks doing well on the back of that. Whitehaven Coal, of course, was up by 18%, but we also saw New Hope Corporation up by 2.6% and Aquila Resources up by 2.6% as well. Seven West Media, though, that capital raising coming through, some of the media stocks under pressure. We saw Fairfax down by about 1.8%. And of course, with commodities up over the weekend, we saw copper prices up by 1.9%, oil prices up by 1.2%. It wasn't surprising to see the miners and the energy stocks leading the gains. But on the flip side, the defensive sold off. So we actually saw a day where the property and the telecom sector was trading low, but unfortunately a disappointing day in terms of volumes.
You know, the broader index can only go so high on the back of Telstra gains.
That's true, and I guess we're coming up to a very important season on the Australian market, and that's earnings season. While we have seen FY12 earnings really stripped back, it's FY13 which is going to be eyed in the forecast, because most investment houses still have a double-digit earnings per share growth forecast for FY13, so they're probably a tad too high. The FY12 forecasts have come right back, but I think what's being eyed now is the current financial year and the type of earnings that we're going to expect. Of course, in the US, we're seeing earnings season as well, and we saw JP Morgan off to a pretty good start on Friday, and that really helped the financial stocks over there. So we'll be watching those US earnings as well. The expectations in terms of these quarterly earnings in the US is growth of 5.8%, but if you have a look at where that growth comes from, it comes from a Bank of America mortgage settlement that they had, and also Apple. And if you strip out those two companies, then it's actually about a negative 0.5% growth that's being forecast for this quarterly earnings season. So earnings being watched in the US, earnings being watched in Australia, and I think the key is going to be the forecast for the FY13.
Very much market had just been waiting for the actual official announcement. It came today. What did you make of it?
So this was Seven West Media. A lot of speculation. We saw the CBA analysts with a briefing to clients last week saying that they expected a capital raising between $400 and $500 million, and of course the Citi analyst coming out last month and saying to the company, you know, please raise money. And this has just been hanging over Seven West Media for a while now, pretty much ever since the April profit downgrade that we've seen. Speculation that they'll need to do this capital raising to put it out of the danger zone in terms of its debt covenants. Now, Seven West Media actually isn't clear on where those debt covenants are and at what level they kick in, but I guess if we just have a look at the average for the media space, it's around 4 times EBITDA to debt, net debt to EBITDA. So if we have a look at those type of metrics, if we continue to see a soft advertising market, then Seven West Media would be getting pretty dangerously close to that. So this capital raising purely to pay off debt, $440 million, $1.32 is the level that this accelerated renounceable issue is going to be done at, and I think the market just breathing a sigh of relief that it's been announced to the market and it's done.